Back with the market right here in 80 now. Just looking at the global screen, it seems like that 2 day strong rebound that had been put in place, the fact that we made it back to that near about 17,250 level, that could get a little bit challenged, at least to start off trade with. And remember, today is the penultimate day. Tomorrow is when you've got the last F&O expiry for the calendar year 2021. So let's see how the day pans out for the markets. But let's also discuss individual stocks and sectors which are going to be in focus. Pankaj Pandey joins in the show for exactly the same. Pankaj, hi, good morning. Good to have you on the show. Pankaj, once again with the spike in the virus all across and the yellow alert issued in Delhi, I guess pharma and diagnostic plays would get into focus. Would you recommend looking at any of these names, Sun Pharma, Metropolis? They've been pretty active of late.
So, hi, good morning. I think with COVID cases, especially in the new variant on the rise, I think one impact what we would see is on the multiplexes because, say, for example, Delhi market contributes 8 to 10% of the box office collections, and if similar move is followed by other states, so then that particular segment could sort of get challenged from a near-term perspective. On the hospital side, I think our sense is that something like most of your hospitals are tier ones, especially Apollo Hospital and Narayana. I think they would have there will be some benefit lastly coming from because one structurally they are behind their peak capex and with mature hospitals sort of delivering about 25% kind of a rose. I think things could be a lot more better for them. But for the quarter, I think if you get more of hospitalization, then the overall challenge for them will also be there. So, except for diagnostic space, which we don't cover, I think hospitals also could sort of face a bit of a challenge because a lot of elective surgeries will get sort of postponed. But I think structurally very positive on the hospitals within the pharma space. Now, coming to some of the names like, say, for example, Sun Pharma, I think Sun Pharma, the good thing is that the US exposure is now 30%, and of that, about 8% is complex generics, where we are not seeing margin pressure. So, within the generic exporter, this company looks attractive. Otherwise, I think hospitals is something as a space looks quite attractive in the healthcare side. I think we still need to sort of watch out for how this variant sort of shapes up. But I think globally the anxiety levels are sort of coming down because it is expected to be a lot less milder and may not really challenge the healthcare infrastructure the way it, COVID wave 2 had done.
Sure. Naresh, we've talked about the diagnostic space time and again. A Metropolis, for instance, has been a pretty much favored one. You've got many others from the pack as well, which have been holding a buzz. But, this trade has already played out. The hospitals recovery that you saw after the second quarter when the non-COVID business actually saw a jump up, or for that matter, the diagnostic plays as well. But are there any buy signals on these names still?
So if we look at Metropolis, it has been in an uptrend, but it's a very, say, a slow and steady uptrend. So the last time in June, it was at 3,100 roughly. And over the last 6-8 months, it has made new 52-week highs. But every time it makes a new high, it again flops down and corrects 10-15%. We've again gone to 3,400 plus today. So that's like a slow and steady uptrend, not very, say, promising as such. The only ones which become promising in the whole pack is a Fortis Healthcare or a Narayana Rudale or the hospital chains. So Fortis is the most interesting one. It is a relatively a laggard in the pack of the whole hospitals. The stock is making a nice formation. Say over the last 10 years, the top was around that 200 mark all through that takeover announcement, etc. So it's crossed about that 200, 220, retested the same in the last fall, and now is making a range from 220 to 300. So it's a nice cup and handle formation. Whenever it crosses 290 to 300, that would be a breakout. So I would go with a Fortis Healthcare, which is where the risk reward is super with the whole hospitality space, and then maybe a Narayana Rudale, which has been a slow and steady uptrend, continues to make higher tops and higher bottoms, again consolidating at 550, 600 levels. So these are the two names I would like to play in the whole space. everything else like a Dr. Lalpath Labs, etc., has given a topping out signal, even a thyrocare. So the best place to go with hospitals rather than any of the diagnostic place, and even in hospitals, go with names like Fortison and Narayana Rudale, which have a lot of catch up to do.
Sure. Okay, let's discuss a couple of other stocks and sectors in focus and macro tech developers. Or LODA, there's been a Morgan Stanley note. They're initiating an equal weight on this particular stock with a target price of 1,312 rupees per share on a 12-month basis. Let me take it across to Vinny, find out what's the rationale behind this. Vinny?
So Morgan Stanley has actually initiated coverage on macrotech developers, and this is with an equal weight rating and a target price of 1,312 rupees per share. Now, what they're saying is the focus. Macrotech developers focused on growing their core residential business as well. Other than that, obviously monetizing their completed inventory, commercial assets, and other land bank is also something that will work out well for the company. Good cash flows visibility is further there, which could help them in deleveraging also. So that is surely a positive sign, sign that they see coming in from macrotech developer. Other than that, obviously it is currently trading at a small discount and the valuation appears quite full. So surely keeping and focus on that, and they have initiated coverage on macrotech developers.
All right, Naresh, I'm just going to spend 1 minute and trying to understand the bank nifty. Now, if one works with an assumption that we are in for a good recovery, will it be led by the bank nifty or IT will be the propeller?
So if you look at Bank Nifty, what we look at is the structure as it has given a classical positive divergence. When we call it the positive divergence is that the index made a new low. Earlier low was around the 35,300. Then we made a low at 34,000 odd. RSI was giving a positive divergence. And now oversold followed by a RSI positive divergence is generally a major bottoming out zone. So I would expect a major bottom at 34,500 to 33,500. Now, if you go to all the previous instances, it either becomes a bottom and we see a rally within 2 3 weeks of the bottom formation, or it can spend a month or so making the bottom out here, consolidating, etc. So out here, eventually the structure setup is just like as it was in the previous falls. And whenever we've done so, there has been a good at least a 50% recovery from the fall. So say from 41,500 to 34,000. I would expect it to at least go towards 38,500, 38,000 over the next 3 to 6 months. So out here, Bank Nifty should take leadership going forward, but this consolidation and bottoming out formation could take a little longer than what we expect. So out here, it's an accumulate on the banking space. In the IT pack, I think there is a rotation being played out wherein the mid cap and the small cap IT, which have done really well, are getting into a consolidation, but the large cap IT is taking leadership. So I would go with the TCS, which is slowly given a breakout about 3650, and it has still a catch up to do in terms of relative performance. I would expect it to go all the way to 4,000 eventually. Same way HCL Tech, which has given a recent breakout. And then Infosys has been a slow and steady up move, wherein it has made new 52-week highs, but it's not a stock which has moved up 5% on a day, but rather 5% over a week. And then Tech Mahindra, which has clearly shown leadership. So I think in IT, we may, on the overall as a pack, will go sideways, but something like a TCS and HCL Tech could take leadership. So in the IT pack, I would go with the TCS and HCL Tech at current levels. And rest on the Bank Nifty, it's an accumulator. It is going to take its own sweet time to bottom out, but I think we are very close to a bottom.
Okay. Pankaj, we can look at the Bank Nifty and talk about the catch-up rally it has to do, or look at the underperformance and find out why it is going on. So let's try and look at the underperformance and try and find out why it is going on. Is it only because of FI selling, or is it because markets are now saying that in the new credit cycle, banks are unlikely to participate the way they did in the previous cycle?
So, Nikunj, I think the only thing which is in favor of Bank Nifty or banking stocks in general is that the risk reward appears favorable for most of the for most of the banks. But I think the bigger question is still sort of whether we'll see a double-digit kind of a credit growth because while retail and MSME can still sort of deliver a double-digit kind of a credit growth, or banks can get double-digit growth there. But overall, I think if the market, especially the primary market, continues to remain buoyant, it is very difficult to figure out companies which are going to which are going to need credit. So for that overall credit growth to sort of jump up, I think the capex cycle has to sort of come out a lot more stronger. And as of now, I think for next 3 to 6 months, we are still not seeing that. So which is where I think, despite a decent risk reward setup, I still would want to believe that banking in general is at best is going to sort of perform in line. Very difficult to sort of outperform the overall market. So I think so that way banking is still not going to sort of do much for most of the investors.
Sure. Okay, let's talk about some of the other stocks which are going to be in focus. And Mukesh Ambani has finally spoken about leadership transition at Reliance Industries. We're going to get you all the details just shortly. Natco Dr. Reddy's and Strides have got an approval for Molnupiravir. So look out for these bunch of stocks as well. Mazda Doc has approved an interim dividend of about 7 rupees per share. You've got GR Infra, which has emerged the L1 bidder for the Noida Metro project, and Raymond, which is looking at investing about 150 crore rupees for a new real estate unit. So all these stocks are going to be in focus. In fact, talking about Reliance Industries and the fact that Mukesh Ambani, first time on a public platform, has talked about the next league of leadership and talked about the new generation taking over. Let me take it across to Vivek and get in more details on the same. Vivek?
Well, Reliance Industries is in focus due to multiple reasons. For the first time, we've actually heard Mukesh Ambani actually talking about transition, and this is something that could have a very major impact on the future of the entire group. But on a more short-term basis, what we are looking at is we are looking at a couple of technical factors that could lead to passive inflows as far as Reliance Industries stock is concerned. So what's actually happened is that when you're talking about Reliance Industries, post the conversion of the rights issue, the free float of Reliance Industries has gone up, and on account of which you're actually seeing a weight up and a weight increase that is expected both in the Sensex as well as the Nifty. So in the Sensex on 29 December, you're actually seeing a weight up of Reliance Industries shares, and the event is expected to lead to an inflow of close to $80 million as far as Reliance Industries is concerned. The street is also expecting Nifty and the NSE Index Committee to implement the weight increase on 30th December 2021. So you could see some support flowing in terms of passive fund buying as far as Reliance Industries is concerned. $150 million is what is actually anticipated as far as the Nifty weight increase is concerned, as far as the Reliance price is concerned.
Okay, Vivek, we'll leave it at that. That's the takeaway coming in on Reliance Industries. Pankaj Pandey, Mukesh Ambani talking about leadership transition at Reliance. I mean, Nikunj and I were just discussing that many a times during the past Reliance AGMs, we've already heard Isha and Anand talk about Reliance Jio. So the signs were all there in that sense, but do you see the stock moving too much because it's the first time Mukesh Ambani has spelt it out on a public platform?
So I think on Reliance, we like both the businesses, especially the retail and the Geo part. I think in Geo, while we, because of the recent tariff hike, we would see about 20 to 27% kind of a beta growth. I think the 5G will be another big kicker or big trigger for the stock because our sense is that by 2030, with 5G being introduced, I think you will see telcos, which is what globally expected also, could see ARPUs increasing by 30 odd percent. So that's a sort of a big trigger in place. Similarly, on the retail side, I think what we are seeing is that the retail space addition, what has happened in the last 2 3 years, I think you will see a double up of that kind of a number in the next 2 3 years. And with online also sort of doing or online contribution sort of increasing, I think you will see a lot more triggers are there both on the retail side as well as on the geo side. Besides the new energy segment which they are looking to chase. So on Reliance, I think we are quite positive, and I think while stock hasn't done well in the recent past, our sense is that it has all the ingredients in place to sort of outperform the market.
Big move in NIT yesterday, and NIT is one of those darling stocks. It came to almost double digit at the peak of pandemic sell-off, and now it is set to close above 500. Rudamurti, NIT, do you track this one? NIT Limited.
Yeah, Nikunj, I see a breakout which has happened yesterday, and that was above levels of 445. And yesterday, you could see just not the price move but also supported by volume. So, this stock should definitely move further higher. Looks very good both on medium to longer time frame and even shorter time frame also. All the indicators are giving a very positive sign. So, right now, if I have to make a new buy, I would like to buy it rather closer to 450. Any dips to those breakout levels will be a very good opportunity to buy and hold this stock. So I see targets closer to 600, and eventually this stock can even go higher from there. So good levels to buy is right now around 450 zone, and stock is definitely headed upside.
Pankaj, let's talk about 3-4 stocks which were part of your portfolio at the beginning of 2021, which are not part of your portfolio. So, which are the stocks which, after the run up or based on the earnings or the valuations, they were part of your recommended buy list or the model portfolio which ICICI Securities and ICICI Direct has, and now they are not there?
So I think, Nikunj, we have not really been churning our portfolio in a significant way. So there are some things which we sort of continue to like, and we still believe that things are still looking quite attractive. I think, say for example, auto OEMs, we have not been chasing, and we don't expect to sort of chase them. I think the only change there we would look at is that we like the ancillary players a lot relative to OEMs. So that is where we would look to sort of add more. Otherwise, there are some themes like, say, for example, CRAMS, which hasn't really performed this year, but our sense is that whether it is chemical or pharma, I think that so this particular theme looks good. I think IT continues to sort of deliver well, and we would want to believe that next 2 3 years IT spend is going to be good. Similarly, I think oil and gas is one pocket which we haven't really sort of chased, so we would not be chasing that even further now. Telecom is one space we would want to sort of add more or add more weightage because we feel that probably going forward, the telecom as a segment can do a lot more better. Retail is one segment where we had been there, but I think we would still want to sort of increase it more because as of now, our sense is that your listed market cap is about 9.5 lakh crores. And with subsequent listing of number of players expected next year, I think this is one particular segment which could be of sort of a big contributor overall to the overall market weightage. So, which is why I think so. There are certain pockets we would want to sort of build up more, and there are certain pockets I think we have been ignoring and will continue to ignore.
Okay, those are some details coming in right now on individual stocks, and I think the pre-open rates have kicked in. Just want to see whether or not weakness from the global markets, is specifically from Asia, is rubbing off on us or not. And perhaps it would, because the SGX Nifty as well was indicating that at least to start off trade, we're going to stall the last 2 days of a rebound. But Naresh, just on the charts, how difficult is it going to be to sustain the 17,200 print, which very swiftly in just 2 trading sessions we've managed to conquer?
If you look at what happened was we were around that 17,000 mark for quite some time. In the start of December, we had gone to 17,600. The major correction started in 3 sessions last week. We started from being at 17,300, 400, and we quickly dropped to 16,400 in 3 sessions. Now that remains the major point. We've sustained above that 17,200 mark, but a major recovery would be about 17,400. So I think in the short term we are getting into a new range, which could be 16,800 on the downside and 17,400 on the upside. And once we conquer the 17,400, that is where we say a reversal has taken place. So we could take some time here, go sideways in this band of 16,800 to 17,400. Also, the fact in the recovery, Bank Nifty has not recovered as much, so that is where it creates a problem. So we'll need Bank Nifty also to fire up for a move beyond 17,400. So, and going into the year end, I would expect another few days of consolidatory moves between this range. So time for some break in terms of the markets, in terms of volatility. We could just go sideways for the next few sessions.
Time to get in some mid-cap trading ideas going then. Rudumurthy, let me start off with you. What's on your mid-cap list?
See, for me, Arvind looks very strong on the chart, and accumulation has been seen in this stock at levels closer to 100, and now stock is decisively trading above levels of 110. So for me, Arvind Limited is a buy, looking at initial targets of 135 to 150 with a stop loss of 100.
Okay. Naresh, what about your mid-cap strategies?
So, like the whole textile basket as such, picking one of the home textile names, Wellspun India, which was in a sideways range, and yesterday it has given a range breakout of 148. Good volumes yesterday, indication of a fresh start of a trend. Stop loss at 142 and a target price of 180 in the short to medium term.
Okay, those are some mid-cap ideas coming your way. I'm just waiting to see the pre-open rates on the markets and what is the kind of damage, if at all, that we start off trade with. Actually, nothing. The pre-open rates are indicating a mildly positive start. So, no, the global weakness is not quite rubbing off on us. While the Nifty, of course, is mildly soft, 17,200 thereabouts is where it's currently circling at. So, let's see which way we head from here. But the government will miss the disinvestment target. That, of course, is an exclusive story that we're going to play out a little later on the show. But first, let's hear out what is the outlook for the banking sector going forward. Here's an exclusive excerpt of the conversation we had with Dinesh Kumar Khara from SBI.
In terms of the demand coming back, in terms of the supply chain aberrations getting addressed, I think the only thing is the recent variant which is actually causing a bit of a concern. So hopefully, I think if at all we can tackle this variant also well, to bye-bye to where it should be, and if at all we succeed in doing that, I'm quite hopeful that the kind of a recovery which you have witnessed in the last 4 to 3 months, that should be there to stay, and hopefully the year 22, calendar year 22 should be much better than what we have seen in the early part of the financial year 21-22.
Okay, it's 9:05, so time for the network exclusive as always, and the government is going to be missing its disinvestment target by a margin of at least 50 to 50,000 crore rupees this fiscal. And with looming threat of the third wave of COVID, if LIC disinvestment gets delayed, the margin may actually become much higher. We have with us CT Now's Prakash Priyadarshi joining in on the show right now for exclusive details on the same. Prakash?
See, we are given to understand that the government may miss its divestment target by a big margin for the current financial year. It may be short of rupees 50 to 55,000 crore against the budget target. Divestment target is unlikely to be met even if government managed to bring LIC IPO in current financial year. It is estimated that the government may fetch approximately rupees 1 lakh crore from LIC IPO. But the way Omicron cases is spreading in the country, and if there will be third wave of COVID-19, it may spoil the LIC's plan to bring IPO. In that case, the margin will be huge. As of now, the government has completed the disinvestment of Air India and CEA, and it has managed to got rupees 12,300 crore through the minority stake sale in PSUs and privatization. Uh, the big ticket divestment like BPCL and IDBI are likely to happen in current financial year. However, the government has claimed that it is going to complete the disinvestment of Pawn Hans Limited and NINL in current financial year because it is in concluding state. It has also claimed that the disinvestment of BEML and Shipping Corporation may also happen in current financial year, and the government will manage to get approx rupees 350 crore from the sale of Pawn Hans Limited, approximately 3600 crore from the sale of BML and Shipping Corporation. So even if government managed to make a transaction of 5-6 transaction in current financial year, it is going to miss its divestment target by a huge margin.
Right, I'm just going to read out the SGX numbers and what do we have there. Well, in terms of the SGX number, we are in for a very flat start, but that's perfectly acceptable. I mean, imagine we are about to close above 17,000 at the beginning of the year. The best case scenario was 14,000, 14 and a half to about 15,000 because we had a higher exit in 2020, but we are all set for a dream year, not for equities, but for about all other major asset classes, whether it is NFT, Bitcoin. Gold also has done reasonably well. I mean, gold suddenly is all set to close at a 1 month high now. So there I mean, it's been 2021 has been a year. As long as you participated, you bought stocks, you participated in any asset, whether it was hard asset or a digital asset, it's been a rewarding year, barring last couple of months where we've seen a little bit of a shakeout here or there. Pankaj, I'd like to draw your attention to suddenly what is happening in the IPO market. A lot of excitement around Diwali. Everything seems to be fading in and around Christmas. Stocks like Policy Bazaar, in fact, have fallen below their issue price.
So, Nikunj, I think, see, the challenge for us is that, see, most of the companies which have come out with their IPOs, the bulk or the most of the value lies in the future. Unlike you see traditional companies where some bit of it is captured in the existing business, existing numbers, and some bit in future. So I think the challenge with most of these IPOs, what we've seen, and we are yet sort of not chasing a lot of them, is that we would want it to sort of settle down. So probably I think we would look at some of the companies. I think post 6 to 10 months or a year kind of a period, and that is where we will try to sort of look at which companies sort of slotted better in terms of in terms of future space, whether there is a white space what they are chasing, or is there just a sort of online version of the existing. So which is why we are still not very gung ho on most of the IPOs being chased by us. So we are really not chasing most of the companies at this point in time. I think the only company which we sort of covered was Ease My Trip because this company was making profits. Is quite so this company is sort of quite smaller in size compared to Make My Trip, has got better parameters. So if on a lower scale, if it is making profit, we like that perspective. Otherwise, most of the IPOs, I think we would want to sort of wait it out for some more period of time for price correction to happen, let the price discovery be better, and then only we'll want to sort of chase. So as of now, I think while the market looks good even for next year, I think we would be very cautious on this space as of now.
Pankaj, you have a cautious view, or you think Nika is a different, completely different kettle of fish?
So I'm not too sure. It's a white space waiting to be chased because this is, so when I look at sort of these new age companies, I think it has to be a white space, something like say for example Zomato is. But then again, I think you look at the valuation. I mean, you're paying 30-40 times sales, which is where I think the challenge is on the valuation side. You need to sort of imagine a lot more what can happen in future and the kind of disruption that can cause. So unless you don't get that comfort, I think we would not really be chasing. We need to be sort of sure of that there is a white space, and this is the only company which is going to sort of tap that particular white space. Otherwise, I think with the kind of lineup, you will see a lot more companies coming up. So which is where I think it's a problem of plenty probably next year. So so that way, I think we are still very cautious. We would not really be sort of chasing these companies even with some kind of a price correction what we have seen.
Okay, let's move on. Let's also hear it out. Pankaj Pandey, great to have you in the show. We'll let you go on that note. Good to have you in the show as always. Dintra Irani, CIO at